Welcome back to the Dividend Diplomats YouTube channel. Bert and Lanny here bringing you another video, another update on this guy's journey to 100 shares on two certain stocks. Recording this here on the eve of, or the night of August 1st, guys. We are in the month, guys. We had a little bit of a few dry weeks. I know Bert was struggling to find some stocks. I was struggling to find some stocks. Got a little bit of red here to start the end of July and the beginning of August. So here's an update on my journey to 100 shares on two stocks.
Before we dive into this journey to 100 shares, smash that subscribe button. Give this video a thumbs up. Join your boys here. We appreciate it. We're also getting on our journey to 20,000 subscribers. So any help you can give us would be greatly appreciated. So let's go. Let's spread the love of dividend growth investing. But let's talk about this, Lanny, because we've obviously been on this kick where we're trying to build large positions in companies. We're not trying to buy new stocks if we can avoid it. We're trying to keep building our current positions here. And obviously, one of your benefits of getting to 100 shares are not just owning a larger position, but you can also then write options on it if you so choose, which we've been dabbling in here or there. But let's hear about this. I'm pumped up. I'm excited to hear about these two companies and the progress you've made.
Guys, those two companies were United Parcel Services, ticker symbol UPS, and CVS, ticker symbol CVS.
Oh, we talked
UPS
about
is
this
going to
in the
give me,
last video, Lanny. These two would
yeah,
definitely be included in that population of people. We did it. We found two more. All right.
two more. Yeah, if you guys haven't caught it, check the eBay video out. Ticker symbol for them was eBay. So here are two more tickers that match the company's name, UPS and CVS. Guys, I wanted to get to 100 shares. I wasn't there on the last update. I was in the low 80s and upper 80s for both UPS and CVS. Let's fast forward to now. Where am I at? How much more does it gonna take? Is it going to take to get me to 100 shares? And am I going to get there? Am I buying these stocks right now?
Let's do that. And how are we going to evaluate whether we're buying these stocks right now? We're going to run them through our stock screener. We focus on three metrics: PE ratio less than the S&P 500, payout ratio less than 60%, history of increasing those dividends, and that bonus metric, the dividend yield. That's what we're talking about there.
It's true. It's true, guys. So let's talk about UPS. Some big headliners as they finally closed the big debate and argument with the union workers. I think it's going to be one of the biggest in history, as they say, helping or not helping, but at least working with 340,000 union workers. Big deal. I think worth possibly $30 billion. We're talking wage increases, I think up front, um, possibly smaller adjustments in the future years, one extra paid holiday. And I think in the release I saw something about including air conditioning in their brown trucks. Guys, you mean to tell me after all these years, UPS never had air conditioning in their brown trucks? If you guys have worked at UPS, let me know in the comments if that is even true, because I feel very sorry, very, very sorry, because every UPS truck that came to my house, I should have given them a couple bottles of water or something.
Yeah, that is insane. I mean, it seems like a no-brainer, but that's why that's why you have unions to collectively bargain some of this. But that's not the direction we're going on this. But that is the reason why. Same thing with sports, why you have some of these things too. This is not a union. I don't want to go there. That's a different route. But yes, in all seriousness, if that's the case, leave bottles of water for your UPS drivers. I'm sure that would be greatly appreciated or something.
Yeah. But so guys, I own, 86.373 shares. So I'm just about 13, call it 13.6 shares away from 100 shares of UPS. Recently their stock price was surging upwards in the upper 180s. It's kind of come down a couple bucks. I actually did just recently grab a share in the 183 before midday. It bounced up a couple bucks again. Um, they're trading at $185.50, Bert. And I mean, the projected earnings continue to slightly decrease on UPS, especially after this negotiation deal was reached. So their price to earnings ratio isn't normally low. It's actually kind of appropriately valued at about 19 times earnings right now.
Just need to remember, we just look at it compared to the S&P 500. We're not saying everything has to be the cheapest stock on the market. So it is undervalued compared to the market at this moment. Let's look at their payout ratio. Their dividend $6.48. That gives you a payout ratio of 65.26%. So a hair above our 60% threshold, but well out of the range where we're overly concerned about them having to cut it.
That's right, guys. 13 plus years of growing dividends, though, for UPS. After this union deal reached, do you think they'll still be able to grow the dividend at that average rate of 6.41%, which is their 5 year yield average? Let us know in the comments below if you think they can still achieve that and possibly achieve future earnings growth.
Right.
Now, for the dividend yield is at 3.49%. Getting below the 185 mark is kind of like the ideal spot because you're at like 3.5 and you feel a little warm and fuzzy inside.
All about those warm and fuzzies. I guess apparently like those UPS drivers that didn't have air conditioning who are feeling
Yeah.
warm
Cold,
inside their
cold and
UPS.
fuzzy.
Yeah. Yeah. So, I mean, that's big. And when you look at it compared to the 5 year average yield, it's above it. Their 5 year average yield is 3.13%, which is a sign of undervaluation as well.
Yeah. Down over the last year, up year to date though, about 6% at the time of this video. But Bert, man, I still got to, put almost $2,500 in capital to UPS. Um, again, you already heard it. I usually like them under 185. I was able to catch them under 184 earlier on August 1st. So I'll keep my eyes out to add, not adding at this current price, but obviously I want to get to 100 shares. So I'm constantly, like Bert just did, watching this one.
That's an important point, though. Just because you want to get to 100 shares doesn't mean you have to force getting to 100 shares. You do it when it makes sense. It's a benefit, but you don't buy when you're not comfortable with it. I think it's a very solid way.
What about what good old Warren Buffett said? Price is what you pay, but value is what you get.
Yeah, and he's like, "Give me this Diet Coke right now. I need these Cokes." All right. Let's move into that second stock here, CVS. You want to give us an update on the position of where you stand from a share standpoint?
Sure, sure.
No,
Let me
I'm
actually,
kidding.
absolutely not. Again, that's what this video is about, is to get to 100 shares. I've been crawling on CVS. I'm at 93 point, we'll call it 6 shares. So again, 6.4 shares away. Uh,
Ooh,
and we'll just blow this one right here. It's only 400, under $475 to get there. And, needless to say, the stock price has finally been coming back down a little bit
yeah,
due to some what's one of their big headliners right now?
yeah. So you got some help from the company. Management seemed to throw you a bone here on this journey because they are down 2%, especially after they announced that they're about to slash 5,000 jobs. Yeah, not one, not two, not three, not four, but 5,000. I mean, we saw this with Walgreens last month, and you were wondering how it was going to flow through to CVS and what you're going to see. Here's your answer. Walgreens is cutting jobs, cutting locations. CVS is cutting off jobs. So it's something that is continuing to plague the sector.
Continuing to plague the sector. But hey, that's the industry. That's where it's going. You know, play by the rules. No, I'm kidding. So that's CVS, guys, down to $73.95, down 20% this year, down 22% last 52 weeks. Bert's slugging that Miller Lite. It's Miller time for Bert right now.
Which you can buy
But
at
analysts,
CVS. You can buy this at CVS.
yeah, pretty expensive case there, probably. Projected earnings are $8.59. It's a PE ratio similar to when we look at Walgreens. It's very low. It's at 9, which is kind of like what the industry then is about right now in this arena. But CVS, the caveat is they're acquiring companies. They have the Aetna deal. They've got a lot of other synergies that they're doing to be the full-on healthcare provider.
Yeah, and I think the other piece is when you look at their payout ratio, their annual dividend is $2.42. That gives you a payout ratio of 28%. So I think that's the one differentiator here with CVS is you could slash earnings by half and you still have a very solid payout ratio. You still have a perfect payout ratio. So they continue to struggle in the short term. They're still positioned to continue maintaining and growing that dividend in the long term.
That is exactly what it's all about, Bert. And thanks for bringing that up too, if you're able to slash it. Interesting dividend history. They haven't been really increasing the dividend every single year because they had quite a few years of a hiatus after the large Aetna deal and taking on significant amounts of debt to do that deal. So they really haven't been increasing their dividend every year. 3.5% is what dividendinvestor.com shows. And that has probably taken in quite a few years of 0%.
And their yield now is 3.27%, so well above that 3% mark there with some cushion. So again, above their 5-year average, like UPS, their 5-year average is 2.92%. So CVS is above it.
Well, so here we are, guys, down 20%. I'm $473 away. I did just recently buy a share of CVS, but you know, put limit orders in if you guys can, if you guys want to recommend it. But I'd like CVS lower, probably below 73 before I'd add another share, maybe even
Yeah.
below 72.50. Um, you know,
Again,
I,
be patient. Same thing I said for UPS. Just be patient, wait for your price and buy.
Yeah, but again, so constantly watching CBS because yeah, I would like to own 100 shares of CBS round and close out that position. Bert said possibly write some covered call options on it. But so in total, about $3,000 away when you actually add them up. It's actually almost $3,001.24 to the T actually. So 3 grand. So everybody just send 3 grand my way. I'll gladly get to 100 shares. I appreciate that support.
Yeah.
Just
And if you
kidding.
haven't already,
Yeah.
before you send Lanny that 3,000, make sure you subscribe to this channel. Give this video a thumbs up and let us know. Give some advice too here for Lanny. If you were him, would you put the money towards getting to 100 shares for each one of them? We'd love to hear your thoughts and opinion on it.
Let us know what you're trying to get to 100 shares and let us know your steps of the journey because we're all in this together. And you're either with us or you're against us, guys. That was Bert and Lanny from the Dividend Diplomats. Over and out.